We know that people value the ability to call Nationwide, to have a conversation with someone who has expertise in their space and get the service that they need. And how do we technology enable those associates to provide an ever better experience, to free them up to focus on the relationship and helping our customers?
They send a form, and in one case, they needed it faxed back. It's like, we don't have a fax. How do you fax stuff? We literally have to drive to Staples to fax things.
Different age cohorts are going to have different expectations, especially with COVID. That has changed. And regardless of age cohort, people want to be able to digitally manage their products.
In a form-forward reality, that NIGO comes back as a day of delay, maybe even a week of a delay, rather than in a digitized reality, then you can provide that feedback instantaneously, probably before the form even gets submitted, right?
Looking out for our customers by handling these transactions in a way that might take a little bit longer, but ultimately is best for all parties involved.
We've got a fascinating episode coming up that's going to completely change how you think about buying life insurance or annuities.
Yeah, this one's a real eye-opener. You know how we always talk about Amazon setting the bar for frictionless experiences? Well, try applying that expectation to buying a life insurance policy, and you'll quickly discover why the financial services world is still catching up.
Our guest today is Bobbi Jo Allan, Vice President of Digital Product Management and Innovation at Nationwide Financial. And here's the kicker. For most people, when you buy life insurance, you're not actually the one experiencing the friction. It's your financial advisor who's drowning in paperwork and legacy systems.
Bobbi Jo walks us through this complex ecosystem and introduces us to something called NIGO, which stands for Not in Good Order. Basically, the financial services equivalent of your online order getting stuck in processing hell.
Imagine if you could get life insurance without filling out a single form. Sounds impossible, right? Bobbi Jo's team is actually working on making that a reality.
Plus, we dive into some really interesting territory around good friction, those moments when you actually want to process to slow down a bit to prevent people from making rash financial decisions they'll regret later.
So buckle up for a deep dive into an industry you probably never think about until you need it. But when you do, you'll appreciate the work people like Bobbi Jo are putting behind the scenes to make it all work seamlessly. Now, when most people think of Nationwide, they think insurance, like, auto or home. Nationwide is on your side, right? But you work with a lesser known area of Nationwide in financial services. So help us understand how your financial solutions are different from your consumer insurance products. Who buys them? How do they buy them, et cetera?
Absolutely. So Nationwide is in fact on your side, and we hear the jingle all the time. And people do think of Nationwide as home and auto insurance and agribusiness and all of that good stuff. And that certainly is a huge part of our company. But I support and work in financial services. So we do retirement plans, we do life insurance, we do annuities, we do other institutional businesses that are going to be less familiar to most people. And it's a huge part of our company. And I'm thrilled to work in Nationwide Financial. It's a lot of fun. These are really complex marketplaces. And I love how you set it up at the beginning there, because if you think about the sale of a life insurance policy or an annuity, we can get into this. There's a tremendous amount of complexity and information that has to flow back and forth between multiple parties. And so I'm excited for this conversation because I think it'll help people to understand a little bit behind the scenes of financial services.
When you think about who experiences the friction, it's not the end user in your world. It's the advisor who has got all these legacy systems. They've got, it sounds like a lot of manual forms still. And you guys are building digital tools that give advisors a better way to explain this. So help us understand why financial advisors are the true users of your financial platforms, why consumers don't ever really interact.
Yes, when people think of Nationwide, they think of home and auto insurance, and you can purchase home and auto insurance through an agent. You can certainly go direct to Nationwide. People are very used to and comfortable with that. Financial services is a little bit different. People tend not to come directly to Nationwide in order to purchase a financial product. The reason for that is these are complicated products. They serve lots of different kinds of needs. And so very often people work with a financial professional in order to get a recommendation. So think about if you have a financial professional, financial advisor in your life, they're going to look at your whole picture and they might say you have a need for a life insurance policy, an annuity could be the right thing for you. That is when the financial professional would make a recommendation to their client about this is the type of product that you need. And by the way, this is the specific product that I recommend. And I offer that as setup because it's really helpful to understand what we think of as the B to B to C nature of the sale that happens when we're talking about our financial products. And so when we think about friction, certainly there's potential friction, but it happens in multiple places. So it can happen at the firm level, right? When we work with lots of large financial services companies, many of whom that you've heard of, banks, wirehouses, independent financial advisor brokerages. We then also work directly with the financial professional when they have a client who's interested in a product. And we have to get information directly from the customer. And so we have three levels that we work through. And part of my job is to work with our businesses, work with all of our digital teams to make that work at every level, whether you're talking about the firm, the financial professional that works for the firm, or the end customer who's ultimately going to get the benefit of the product.
How critical then is that ease of use with your products and services a deciding factor in whether your product gets recommended by a financial advisor or they go with some other product?
Oh, you hit the nail on the head. And financial professionals and firms absolutely demand and expect what we in financial services consider to be a much more seamless experience that you would have seen 5, 10, even 20 years ago. This has historically been a very paper-based business. If you think about the purchase cycle on some of our products, they can be months in some cases, right? You might have a situation where a financial advisor might say, you're getting to an age where an annuity could be a great way to help protect your retirement, provide additional income, all of those things. That's a conversation that likely starts well before Nationwide is brought into the conversation. So very long purchase cycles. So then you look at the process at that point in terms of how the financial professional and the end member interact with us. It's to start that information flow back and forth.
Have you seen people experiencing things like Amazon and how easy it is to go get product and have it delivered today? And suddenly they have that same expectation for buying life insurance or buying an annuity. And that's sort of up the game for you all?
We are seeing that. And we talk about it a lot that the expectations that people at all levels, because people who work at firms are also customers of the Amazons of the world, as are financial professionals, as are end members. And so they all, regardless of what level they're talking about or what level we're talking about, they have that expectation. And so certainly we historically have been a paper-based industry. That has accelerated and you really don't see as much paper anymore. A lot of that has been digitized. And where we are spending our time thinking about now is what we call a formless future. What would this market look like? How would we transact if we didn't have forms involved at all? So this is a very radical way of thinking. We're working through exactly what that would look like. But I'll let you in on one of the secrets of the financial services world. One of the bogeymans is what we call NIGO. NIGO is not in good order. And so right up the alley in terms of you think about friction. What does NIGO mean? It means that either for a new product that someone is buying, or someone wants to take a withdrawal or even change a beneficiary or what have you, there are forms associated with that. If you don't fill the form out right, if you have the wrong form, if you forget to sign the form for any number of reasons, it can result in what we call NIGO. And for us, NIGO would be the equivalent of if I was an online direct to consumer platform that the person can't complete the transaction. In our world, that's NIGO. And so it causes frustration all up and down the chain, right? Like we then have to put additional resource in terms of to address the issue. The financial professional often has to step in. They may or may not have known that the end customer had reached out. Like if they're changing beneficiaries, the financial professional doesn't have to get involved. And so you've got NIGOs create friction across all of those different layers that we're thinking about for financial services. And so we look at a formless future as a way to prevent NIGO before it happens. Because if you can't fill the form out incorrectly, if you can't miss fields, if you can't forget to sign it, it's going to radically reduce the number of the amount of NIGO we have. And we at Nationwide are thrilled to have unbelievable associates in our distribution organizations, our sales organizations, our service organizations. And we know that these are complex sales and people have questions. We want to make sure that their time is spent on relationship building and helping people to understand the products that they bought, not on helping people figure out, okay, which form did you use and which one do you have to use? And so NIGO is something we spend a significant amount of time on.
NIGO sounds like a really interesting concept for me because you have to be able to measure NIGO, the frequency against the forms, and then turn that into some type of meaningful benchmark that you can then improve on. In a form forward reality, that's probably very challenging. What are you doing? You're just looking at number of transactions that got sent back.
Exactly. Well, we do Pareto analysis. We do lots of different ways to understand what are the contributing factors because NIGO, if you think about it, it's a symptom. It's not the problem, right? It tells you that something upstream didn't happen the way it needs to. And that can be any number of reasons. Sometimes it's more user errors. I mean, it's really frankly because things are complex. And if you're an end customer, you just like, I found the withdrawal form online. That's the right one, right? Well, probably not. And so NIGO is an example of something that's gone wrong upstream. And we can and do frequently take a look at what are the major contributing factors of NIGO, and then how do we further up the chain, evaluate and manage and ultimately reduce that because it's good for everyone involved and it provides a good experience for everyone involved.
And in a form forward reality, that NIGO comes back as a day of delay, maybe even a week of a delay, rather than in a digitized reality, then you can provide that feedback instantaneously, probably before the form even gets submitted, right? Because you can actually validate the form live, like you would see, hey, this is a required field, those kind of things.
Yeah, absolutely. And I think about having done a lot of work in the digital space, I've even evolved my language and how I talk about it from digitization to transformation. Because if you think like, and again, these are super complex businesses, just to give folks, a sense for what a sale might look like. If you look at a life insurance product, you think about the amount of information that we need at all levels in terms of like there's underwriting involved and there's lots of back and forth at both the end customer and the financial professional level. It's just the way it is, right? And we've done tons in terms of automated underwriting to just make that as smooth and easy as possible. But at the end of the day, there's information that has to go back and forth. And so let's just say you have a 10 or 15 step process that is involved with getting from point A to point B. The old world, it would have been forms and going back and forth from human to human. Digitization is great, right? And I've now taken that 10 to 15 steps and it's now digital. And so that's faster, easier, but you still have that 10 to 15 step process. And so what we do and what my team and I lead the innovation team at Nationwide Financial is help the businesses and help our partners think through how might it look completely different, right? So we can absolutely digitize a 15 step process and that undoubtedly is a better experience for all involved. But what if it was 5 steps? Or what if like it was even measured in steps? And not only does that provide a better experience for everyone, but it enables us to do so much more in terms of data capture, right? I mean, and when we start to think about the advent of emerging technologies of, AI is not new, but generative AI is, the core foundation of being able to leverage those technologies is going to be having the data where you can access it and it's governed properly and all of that. And so it's not really just about digitization. I think it's more about transformation. Easier said than done, but that's really when we think about operational excellence, we're reframing it to be bigger picture than digitization at this point.
It's a little bit of a tangent, but I can relate is a refinance on my mortgage had a whole bunch of digital forms, but how is that functionally that much better? Because I'm still completing a form, it's still getting reviewed. It's just I don't have to print it out and use a pen. But other than that, it's not really that digital. It's actually still paper.
Exactly. That is a great analogy and very similar in terms of lots of information has to pass back and forth. And depending on even how the digitization works, there's a chance that you can still submitted incorrectly or miss important fields and so on. And that starts the whole process of having to go back and get additional information. And ultimately, our goal is to help people protect their futures. And in order to do that, they have to be able to access our products and understand what they're buying. Our financial professionals, they demand the ability to work with us seamlessly because ultimately they want to provide that experience to their customer. And so all of these things are going to be super important in the future as we we require and want to provide more seamless experiences in an environment where we are highly regulated and these products are complex and there's no two ways of getting around that.
I'm shocked at how manual the process is because you talk about financial advisors. Our financial advisors just jumped ship and went to a whole different firm, which meant we had to change all of our brokerage accounts, all of our checking and bank. It's been months of work. And when we change all of our checking accounts, now it affects our life insurance, it affects our long-term care insurance and all that. And so my wife, in so many situations, has had to call the company. There's no way to do it online. You can't access it. You can't just change which bank account you're drawing the funds from. Requires calling. They send a form, and in one case, they needed it faxed back. It's like, we don't have a fax. How do you fax stuff? We literally have to drive to Staples to fax things.
Completely. Yeah, and I mean, so you talk about friction and you personally had that experience and you absolutely nailed it. And we fortunately have moved on from those worlds at this point, although we all remember them. And it is something where like I think part of it was COVID, right? And so necessity of invention, right? Because there were in some instances where partners didn't necessarily want to work digitally. They were comfortable with paper, that's what they wanted. And at the end of the day, that's if that's what they want, that's what we will, of course, provide. COVID really helped accelerate a lot of expectation. And our average customers tend to be, and I'm going to leave aside retirement plans for a moment because obviously all ages are going to be participants in retirement plans. But if you're looking at our life insurance and annuities businesses, those tend to be people who are maybe more mid career up to leading into retirement and in retirement. But one of the most interesting things is we don't actually see, like, I think it might be you could think, well, different age cohorts are going to have different expectations, especially with COVID. That has changed. And regardless of age cohort, people want to be able to digitally manage their products. They want to understand what they've purchased. And what I mean by that is like our products have a lot of features and benefits. That's why financial advisors make the nationwide recommendation. And so it's important for us to make sure that the end customer understands all that they can get from the products that they purchased. And the life cycle on one of our products could be measured in decades, right? Like think about a life insurance policy. You could have that policy literally for decades. And so do you remember the exact reasons why you made a decision 10, 20 years ago? Of course not. And so it's important for us to make sure that people have the ability to interact with something which is esoteric in nature. I mean, these are financial contracts. You didn't buy a thing that you could put on a shelf. And so that's something where we think through what should people be able to get to and access via our mobile app? When are they going to want to or need to call? And a lot of times people want to call. They want the reassurance that I'm going to talk to someone and they're going to tell me that I'm doing this right. Or I want to talk to someone to make sure that I'm understanding that I think I'm reading my policy this way. Am I right? And so that's something it's important for us to make sure that we provide that experience.
Something that, Chuck, you mentioned how your advisor left one and went to another. My advisor also left, but I decided to give the new advisor that replaced a chance first. And for the first time, my financial advisor is younger than me. So that's a little bit of a thing that I guess I am getting old, but
Happens to the
it's
best of us.
right, right. It's definitely an experience shift for me in that moment to understand whether or not my portfolio feels fully managed. And now we're reviewing and we're going through all these things, and he's making these recommendations that are more aligned to me. So, it feels more comfortable now that my advisor is, I guess, more relatable as opposed to applying a lot of this older profile type mentality.
I've worked with and done a lot of financial professional research in my career. Earlier in my career, my background is in research, and then spent some time in corporate strategy. But research has always been a part of it, and I always think of financial professionals is, of course, they do what you would expect them to do. They're going to provide advice on your portfolio and all of that good stuff. They're also kind of therapists, and they have to have that ability to understand what are the stressors that their clients are facing. What are they worried about whenever there's any kind of market disruption? Who's the first person that gets called is the financial professional. And often people will get nervous and what should I do? Should I pull my money out of the market? And so they have really interesting jobs in terms of helping people ride out waves, understand the implications of decisions and all of that stuff. It's a really fascinating dynamic.
Do you find there's a tension between trying to reduce friction for the advisors without bypassing them in the sales process? Or even friction for the customers? Is there a risk that you bypass the advisor and that creates issues?
Yeah, no, that is such a great question. Channel conflict, right? And we have worked really hard to manage channel conflict, and how we think about that is it goes back a little bit to omnichannel, but financial professionals always want to make sure that they understand what interactions their clients are having with the provider of the products that they have purchased, because that's just a good management, right? And so, particularly in a situation where a customer wants to withdraw money or essentially change something with the product, we make sure that the financial professional is involved with that, even though the customer may in fact come to us to do it, and they may have to come to us in order to do that. But we want to make sure that the financial professional is in the loop and knows what's going on. In other instances, change a beneficiary, right? Like do things that are very basic policy management. The financial professional would rather not be involved in that for all the reasons, right? Because they don't need to be. And so that is why we do have those multiple lines of connection into the company, whether you are the end customer who's purchased the product or the financial professional who made the recommendation. We work really hard to make sure that all parties are involved, especially with I'll give you examples like the whole point of our products is that ultimately you're going to, if it's an annuity, you're going to get money for your retirement. Like that's why you purchased them in the first place. And in some cases, you might need to wait a certain amount of time before you take income. That's why they're sold that way, right? And so you would have an accumulation phase where for a product, and then ultimately it gets into distribution. That's why you bought it. But there are kind of like best practices or policy features that you could accidentally do something which is going to not give you as much benefit as you could get. And so it's really important for us to make sure that we catch those situations, help people understand what they purchased, loop in the financial professional, just so that people don't inadvertently make a mistake that they would prefer not to, just because they don't know.
Hey, Nick, remind me again, how much money can a retailer lose if their site is just 0.1 seconds slower during Black Friday?
Millions. And I'm not exaggerating. We've seen it in the data.
Which is why we've pulled together the 2025 Black Friday Cyber Monday Performance Playbook.
Yep. And that's real tactics from top retailers, includes core web vitals, performance budgets, checkout speed tips, and more.
If you're prepping for Black Friday, you need this. It's free, ungated, and honestly,
could save your holiday revenue.
Download it at bluetriangle.com/ebook. Or we'll put the link in the show notes. There's so many financial products that a financial advisor could sell. What are the top reasons for how they choose one carrier over another, and how much does speed and ease of transacting impact that decision?
Lots of reasons why you would take a look at one product versus another. And there are what I would call, like, without getting too in the weeds, let's just call them bells and whistles. And it's almost not unlike when you go to the store and let's just say you were purchasing, I don't know, like a TV or something, and they're all slightly different. Do you know what I mean? Like this one has this feature, that feature. And this is not any different in the financial services space where there are lots of companies that offer annuities. They're pretty complicated. And so what the firms and the financial professionals will do is kind of look at them side by side. And they want to make sure that they are making a recommendation that's going to provide the best value for their clients. That's at the firm level and the financial professional level. And so you're kind of what we call like not on the shelf or not part of the recommendation set unless the firm has looked at that and said, we think that these products are the best for our customers. And so we have great firm partnerships. And so that's sort of like you're on the shelf, therefore financial professionals would consider you. At that point, ease of doing business with Nationwide is a huge part of it. right? And I was just reading a testimonial from a financial professional that had to move a big block of business, and they were moving it over to Nationwide. Like a customer had come in, and it was a lot of cleanup that had to happen with this client. And they reached out to provide accolades because they were moving and working with multiple providers, and specifically called out how much easier we were to work with. And we know that the next time that financial professional has to make a recommendation, and while there are lots of bells and whistles and features and benefits, at the end of the day, if you're in the game in terms of the value provide, of course it's going to make a difference, right? Because just like everyone else, they want this part to be easy for them and easy for their client. They don't want the client to have an experience where they have to go back and forth and they don't really understand what's going on in the process. And so we absolutely see that the experience that we provide to the financial professional is part of what can tip the recommendation decision.
And I imagine from your perspective, you'll see a trend as the younger generations become older, that this digitized requirement becomes greater and greater. And so it's really about the financial advisors and who they are to the level of digitized requirement that's needed. So like back to my example, probably wasn't as necessary, 3 months ago, but now it is more necessary now. And there might have been a decision shift based on the experience that my financial advisor has. Not that he's not going to make great decisions for me, but because he's going to create his own opinions and his biases partially because of his experience working with these brands, because that means something to him too for the value, whether that's the dollar value or just the value of working with a brand. It's a very interesting shift that's occurring here. I see it.
It really is. And I'll introduce another layer where we think of a frictionless experience, which is I've mentioned firm a couple times. And so in order for our products to be what was called on the shelf, which means I'm not going to use any specific for partnership brand names, of course, but Bank X. In order for them to sell our products, we have to be what's called on the shelf. And that just means that it's in their software and all of that. That's an entirely different set of integrations that has to happen. Right. And so it's not just like, oh, you work with Nationwide, here we're going to send you copies of all of our forms. Like there are data integrations that have to happen. There are systems integrations that have to happen for the firm to even allow their financial professionals to sell Nationwide. And so you have that layer as well. And we're spending a lot of time right now on what I think we're calling like the partnership platform. But how do we make that process much more streamlined, much more standardized? And that's a lot of API development and not just development, but publishing, right? Because you can imagine the complexity of a company that has as many systems and as many products as we do. How do we make it super seamless for our firm partners that are responsible for working with us to get these products on the shelf to make that much faster and easier? And the more you can standardize that, the faster it gets. Then you can add more products to their shelf much more easily. But that is a space where we are spending a significant amount of time that the financial professional and end customer would never see that, but it's really important for us to even get access to those marketplaces. And so we do have multiple levels and layers that we are working through and solving for.
You said a phrase earlier, B2B to C, but this is really more B2B to B to
Yep,
C. It's
that's right.
three layers of business
There's
to business.
and
That's what I'm trying to say.
we don't have all day, but there's even more. If you start to look at how the distribution channels are structured and the different kinds of financial professionals and how they get to market. It's one thing that I absolutely love about I've been working in financial services for about 17 years now, and I love it because it is complicated and there's a lot to understand. There's always something new to learn. And what I always tell people, especially earlier in their careers, is that you don't have to know it all. You can't, in fact, know it all, but you have to know who to call. Right. So Nationwide is a very relationship-based business, and you learn who's the expert in this space. And because there's just no way to retain it all. But there's a lot of distribution complexity as well.
So you talked about, if there's too much friction of the wrong kind, it pushes advisors to recommend competitors who have smoother processes. A topic that we talk about all the time here is the flip side, is when is it good to introduce friction, small bits of friction, and are there opportunities or times that you do introduce friction either to the advisor or the consumer to actually make the process better or make more informed decisions or avoid, errors or things?
Yeah, it's such an interesting concept, and I don't know that we would necessarily use that language for it, but I'll give you a good example. And I mentioned a few minutes ago about how the financial professional as kind of part-time therapist. One really good example of that, I believe, would be, let's say there's market disruption, like market drops, market rises. That obviously has a huge impact on the people who own products, and people understandably get really nervous when they start to see the impact of the marketplace haven't what that does to their portfolios. We wouldn't necessarily use the words introduction of friction, but the way we would describe it is if someone calls us and says, I want to take all my money out. I'm nervous, whatever. That's a really good example of we would want to make sure the financial professional understands that this conversation is happening. We wouldn't want in that case for it to be super easy for a person to make a rash decision that they might later regret. We just want to make sure that they have all of their knowledge and they can still choose to do what they want. This is their money, to be clear, but that would be a good example of um I wouldn't want that to introduce or to be too seamless because it could lead to worse outcomes for our customers. And so that's not customer care, which is what we try to provide. Another good example would be we spend a significant amount of time and energy on fighting fraud, right? I mean, at the end of the day, we absolutely have bad actors who would love nothing more than to get access to people's financial products. And so that's another one where the withdrawal of money, it's like it's a fine line, right? Like we want to obviously make sure that people have the ability to do what they want with the products they've purchased, period, full stop. And we need to make sure that we have the appropriate layers and protections in place to prevent fraud in it before it happens, not to have to rectify it after. So that would be another good example of there are lots of checks and balances in place, rightfully so, when it comes time to and there are certain types of transactions, right? Like when people want to add someone who can make decisions on their policies. Those are the kinds of places where we want to make sure that we have everything in line, that this isn't an elder abuse example, that this isn't someone being taken advantage of, that it's what they actually want. So I think those would be really good examples of we are actually looking out for our customers by handling these transactions in a way that might take a little bit longer, but ultimately is best for all parties involved.
So in that moment, it's not what you want, but it's what you need.
Right. And just to make sure that you have all the information at your disposal, because we also don't want people to wake up, a week or a month or a year later and realize that they made a mistake based on not having the full amount of information about how the products work and all of that, and have the opportunity to get advice from their financial professional because that's what they're there for.
Back to about that, like making a decision you don't really recognize. This is more of that mortgage example, but I pulled a HELOC to be able to add on to our house, and I don't regret it one bit, but I also did not understand what a HELOC was until I started paying on this thing. So
Well, and it's so fascinating, like in financial services, because you go to school, you learn about this stuff, and you learn about things like the efficient market theory, right? Like the market just does its thing. And sure, sure, sure. But when's the last time you met someone who was entirely rational based on numbers? I mean, I would say our actuaries get real close, and I say that with all the love in the world. But outside, like very few people have the ability to completely divorce the emotional. Like money is emotional, right? It is the ability to provide for your family. It is a mark, like it's all those things. And so I think that very few people, very, very few people have the ability to dispassionately look at this investment is better than this investment, therefore I'm going to do it. There's lots of emotional factors at play around relationships with debt and around savings and how much is enough for retirement and when am I ready for retirement. And so there's a lot of emotion involved with what I think sometimes can be looked at as like this is just a dollars and cents decision.
It's so funny you mentioned HELOC because I was all of this is making me think of a screw up I did. And I wasn't even going to bring it up, and then you mentioned it, but we had to do a HELOC. We had an unexpected financial event that we had to do a quick HELOC on, and I got it at like a 3% at the time. So, like a really great rate. And when you pull the money out, there are two ways to pull it out that they didn't clearly explain. I picked the wrong way that locked us into a fixed payment, a fixed fee every month of $150. The interest rate doesn't matter. And once I did it and I realized what I did, within the 30 days, there was no undoing it. The only way would be to pay it off and to do it again. And I'm like, well, that's not going to happen. Yeah. So I was in a rush. I didn't read through everything carefully. I was doing it online and doing it quickly. And so 100% I can relate to all of that.
That is a really good example of when they should have introduced more friction into the system.
What's one common misconception about frictionless digital experiences and financial services that you think people get wrong that you fundamentally disagree with?
What I would like people to understand about how we think about frictionless and financial services is the juxtaposition of the technology and the human. We absolutely want the technology to be able to take care of easy transactions that people just don't want to deal with talking with a person. And that's what we spend a lot of time on, whether that is an end customer, the financial professional, or at the firm level, while retaining those personal relationships. And we know that people value the ability to call Nationwide, to have a conversation with someone who has expertise in their space and get the service that they need. And how do we technology enable those associates to provide an ever better experience, to free them up to focus on the relationship and helping our customers? That's something that's really important to us.
That's great. Well, Bobbi Jo, what's the best way for people to connect with you if they want to keep the conversation going?
Yeah, absolutely. And I would welcome that. You can find me on LinkedIn at Bobbi Jo Allan, Nationwide Financial.
Awesome. Well, thanks so much for joining us. If you enjoyed this episode, don't forget to subscribe, leave a review, and share it with a friend or colleague if it was helpful. And if you've not checked out our newsletter, which dives deeper into these topics that surface in our conversations with guests, be sure to subscribe at thefrictionlessexperience.com. You can always connect with Nick and me on LinkedIn and check out our latest tips. I am at Chuck Moxley, and Nick is
At in Paladino.